Thanks a lot, Katerina. Welcome, everybody. Welcome to my webinar. Broadcasting live from Mexico City. Today is Wednesday, March 15th, half of the month, 2017, 1 a.m., 30 minutes past the hour, my local time, 7 a.m., 30 minutes past the hour, GMT time. We're just 4 days and a half more or less for the astronomical spring, leaving back winter. So yeah, here in Mexico at least started raining some days ago. So something that I like, rain. And what else? I was just about to launch something or something. Okay, well, we all know what it's all about today, right? Today is about the FOMC meeting, the official Fed rate decision, and the speech after. That is, if I'm not wrong, at 18 hours GMT time, so we have plenty of uncertainty time to find some trading opportunities. I've been detecting that the market's moving a lot, so differently from other times. And this is strange because since the markets are ruling out a rate hike completely, and maybe after the latest wages report, maybe we are not expecting super hawkishness on the speech after. For that scenario, the market's moving quite well. We're going to review some movements. The potential opportunities are more or less the same that we've been talking about now in the previous webinars these latest 2 days. We're going to review the traders blog posts because I want to show you that when you look for high quality information and you try to draw your strategy, your trading plan upon that information, it pays off because this information usually keep working even days after. So we're going to review how the levels I've been mentioning to be important for the price action after I posted those blog posts. They're still being valid, and we're going to review that because those are the ones that are going to help us to try to find any kind of trading opportunity during and after the Fed decision. What I expect during the Fed decision is a wild volatility to the upside, then to the downside, or first to the downside, then to the upside, and then waiting time, and then the market will start moving. I believe that dollar will sell off after maybe some spike and bullish spike as a take profit behavior as we saw on Friday. So that is what I believe. Maybe the bullishness on the dollar will resume tomorrow or by Thursday or even next week. I mean, all the speculation is it's unwinding. So yeah, it's time for the ones that decided to take some risks, maybe to get some reward, part of that reward already. So I believe that's what's going to happen in the next hours. But of course I can be wrong. But even if I am wrong, these levels are there to help us to know when we are in no man's land and when we are in a very tight range, etc. Okay, so we're going to review that. Well, about the trading competitions, well, I am stuck in all of them because I just decided to shrink a little bit the activity on my trading accounts. So yeah, maybe it's not going to be a good month again. But something interesting is happening today. I just opened in the daily stock options. Again, I opened some trades for the Taiwanese session, and it ended on profit. I will open some trades in American session. I see that maybe in the daily stock option is the only one where I can really find a place during this month. The strategy contest, I think so, but we need to have a retracement in Mexican peso. I'm going to explain a little bit further in some minutes. So let's go part by part, like Jack the Ripper. Okay, here's the latest post yesterday. Okay, dollar yen daily outlook with price range boxes. I commented these levels in the webinar first, and then I made the blog post and I posted it. Okay, so this is a daily chart. As it says here, is the 77 quality descending triangle in the daily charts. Here it is. Here's the descending line, and here is the other. Of course, yesterday the chart was way clearer, so it gave a little bit more perspective of this kind of movement. But the thing is that we focus on the price boxes. Why? Because when we're facing, and this is exactly why I don't like the fundamental contest, because if you have several, let's use these boxes as an example why I would like to see a little bit of changes in the fundamental contest. But of course, those are not going to happen. But this is my argumentation. Okay. Well, first of all, review yesterday. This is the daily chart. I was commenting that we have a super strong support during the next maybe rest of the week. This is more or less the start of the next week. So it's important that we check the boxes, the thickness of each box, where it is located, in what time, in what part in time, and the structure. Okay, here is like a no-brainer. What I believe is that this zone is super strong support, so the market could stabilize here, and this could work as a buying zone. What I expect from this moment on is, as you can see here, we have a crystal roof here, so the market could actually spike. I don't think that will happen because of the structure that we've been taking some profits out of the table. So the market is kind of making a new floor here. So I really don't know, but if we have a super strong, let's say, Fed announcement, yeah, this could shoot up, because I expect that in time these resistances will work just after the Fed decision. But well, what I do believe is that this will stay here. At the moment of the news release, what I more or less expect is that this could spike down up to one of those levels. They could even get here. I mean, it's a lot, because it would be like 50 pip in some minutes. It could happen. Of course, that doesn't mean that the price should and will go here, but of course we could have anything here at least before this box ends is like a buying zone. After that, we have another buying zone, but lower. Okay, so what I believe is that maybe the market will start here, maybe it will retest the floor before or after, just after the Fed decision, to come back up, and maybe before the week ends, to move up to this box, to start moving up, maybe here and stabilize here and do this, or even this and stabilize here and eventually close the month below 116. That is what I believe. Okay, so yeah, this as you can see, I drew these boxes. And yesterday, this daily candle just touched this to the, not to the pip, but very, very significatively precise. So yeah, I believe that this will continue to be respected for the next hours and days. But this is the important thing. I posted this on March 13, that is on Monday. I was commenting about this both need to be used in tandem. Sorry, this one. Because we have, this is dollar yen posted on March 11th, 13th, It's pretty much the same, but it's different. This is the 4-hour. Okay, this is the also the 4-hour, but we have different supports. For example, we have I put this price box since March 11, and it has worked. To just look at this, just look where the floor is building. It's just building here. So here it was unnecessary that I draw that again. Instead I put this resistance zone that it was respected, and then it sold off. Okay, but besides, above this, we have this another layer of resistance, and then afterwards we just enter into the time zone where this resistance should work as a kind of strong resistance. You can see the thickness is not as this one. This could be broken to the upside, but yeah, as long as we don't build some momentum here, let's say the market could jump here and then, but what I expect is that this should build some momentum here, just to here maybe jump and break. Okay, so as you can see, we are in a jail. We are in jail. The price is moving in a box. So according to the yesterday's daily price boxes that I drew, plus all this, we realized that these levels are precisely touching a daily price box that I drew in the daily chart. So the price is respecting a daily chart box here, and it is respecting several 4-hour resistances. This one is the first, and this one is the second. This to the pip it was respected. So yeah, as you can see, it won't be easy to break. Why I expect that this could even drop to the 114 because of this. Here we have plenty of room to go up to here, but look the timing. This is what it's interesting to me. That is why I believe this support should be tested before non-farm payroll number, because it's just about to expire the what I feel is the acceptable duration of the support zone. If this support zone is not retested here before this box ends, we could even go lower. So that is why I believe that the market maybe could consider trying to get up to here, or at least to here. We can see that this box is very close to the 114, and this is just at the frontier. So maybe getting here, the 114.25. It should be like very close to here, and it would be like in this whole support zone. It would make a lot of sense because we are in a bullish long-term trend in dollar yen. So the market tends to favor and to try to push the market to do something in the best interest of overall the ones that could spend time and money to organize a price action in order to give no other chance to the market than to go, for example, to the south to sell. Why? Because they're maybe interested in buying here and buying even bigger here before this chart box expires. Of course, this price box, I don't have anybody in a big bank telling me this. No, this is something that you just develop after time. You learn to feel when something could work and for some certain times. Okay, so in any case that we don't have this pullback, this could have a bad influence for the long-term players, because if we have, for example, a sudden spike but to the upside, besides having this first layer, this second layer, this third layer, and this fourth, fifth, and the psychological sixth level, of course it will be completely overextended. The market will run out of steam. And in any case, we have a spike to the 116. What I do believe is that just afterwards, it will be we will have a take profit pattern just after hitting the 116 that could even sink the price. Imagine getting here at this zone. At least in this chart, we could have even movements to the 114 and even lower. Here we could have some more days to have these supports, but according to the most important, that is the daily, if we have, for example, a sudden spike by here or here, yeah, maybe this box wouldn't be able to sustain and it could drop here. So my assumption is if the market after the Fed decision, before retesting this support zone represented here, here, and here, and it decides better to retest immediately these resistances, the momentum will fade away here, and then we will have a drop here. But the thing is that you can see that if we have a drop by here, these support zones are already over. So yeah, we could have a sharp, quick movement here. We have some support here, but look, the thickness of these boxes are not the one like this, are not the same like as thick as this. So what I do believe is that if we don't have previous Fed retest, or just after the release a retest support, it will spike up and then move back up to the 114. This is the problem. The problem is that we have a spike here. Let's imagine that we make a spike and here it runs out of the steam. It could go directly to the 114, but even lower, and retest very close to the 113.75. And maybe we could, but the problem is afterwards, if the price gets here and doesn't manage to jump above convincingly again the 114, we have chances that when this box expires, this is the daily, this is more or less by the end of the month. And we have the price hovering this zone by the end of the month. The chances of having this then selling again to the 112 to the 113 will increase importantly. So this is the strategic thinking. If you're a major player, you have interest, you have positions already open in the market, and maybe you're not precisely happy to see this to happen. So the bigger fundamental bias players that are buying dollar yen because of the fundamentals, not only because of the dollar speculation on Fed, but on the weakness of the Japanese economy, maybe they would try to make whatever possible, whatever they can do to make these support zones to work before they expire. Okay, so in any case that they fail and they open path for a bigger drop in the dollar yen quotation, let's imagine I was explaining this by the end of the month up to here. Of course, this would mean huge buying opportunities for these guys also. For these kind of guys, this is not the end of the world. If this doesn't, if the steam is not sustained and it simply gives way to a pullback to the 113 or even the 112 again, they will be buyers there. But of course, there is an adjustment because they incurring costs. First of all, of course, the floating losses that they need to have an insurance to cover those positions. Name it hedging, name it buying options, whatever. So it becomes expensive. So it's going to be interesting the reaction just after the Fed, and it will let us know more or less what we can expect. Again, and as a conclusion of this dollar yen thing. The most important, this is dailies, this is the 4 hour. Okay. If the market doesn't retest here, now it will retest eventually the zone. That's what I believe. So a lot of players will try to sell this even just to sink the market, to generate momentum here, and then to allow the market then to jump above and to continue the trend up to the 120, maybe for the next month. This is not necessary for the next one, but this is how this looks. Okay, if this is like the whole overall structure of dollar yen, that what I expect to happen. This is you need to know that this is not flawless. This is just my opinion, but that even if I am wrong or not, these price boxes should work and continue working maybe for the next, at least this one for the next week. These ones maybe, I don't know, maybe if we really have for example, a pullback that erodes this support zones, maybe these boxes will be removed, and then we will stay just with this one and this one. But of course, you can see that here we have very good support reasons, even if these boxes are removed, and we have this just about to expire, at least in my perception. Okay, so yeah, this is what I believe. So yeah, after Fed, if I see this jumping before retesting, I will be looking for shorting opportunities by here. If I see the price jumping and retesting this support zone, even if it stays here for one day, but just after moves up, if it moves here, I will keep my longs open intact. If I see a sudden sharp movement to the upside without retesting the support zones deeper, I will be considering closing my longs for part of them and shorting at some moment, maybe. These are my insights on dollar yen. We have some comments. Guess 107 says, hey guys, hey, Guess 107. Is it live? Yes, it is. I am live, and I am alive. Hey, Birdie. Hey, yo, yup, this webinar is live, and hello, Guess 77. 107 is the new 77. Bon, just James for France 0077 is for the agency, okay. Birdie, Katie, okay. Okay, I didn't know. So thanks for the heads up. So, well, this is a very complete plan. As you can see, this information could work. And the idea of leaving this in the trader blog is that you can, if you like this price boxes, you can look back and check them out even days after and see how they worked, if they worked, and for how long they worked, and how they worked. And maybe they could help you to complete your insights and your expectations on certain events, for example, the Fed. So yeah, in dollar yen at least, if we have a massive sell-off, let's imagine that besides being a profit-taking opportunity, besides we see some kind of dovishness in the Fed officials, don't panic if we see this even going lower. This doesn't mean, at least so far, that the movement to the upside in dollar yen is over. It really needs to break this box convincingly before we get here, but very convincingly to switch gears instead of north to south. I mean, before maybe getting here, the price should be here, and maybe you can consider that we have reverted and we will continue moving down. But the thing is that even if we stay here after for some days, this could even be the best scenario for dollar yen traders, investors, sorry. So I wouldn't be surprised to see a drop here and the price stays here. And maybe at some moment before the month ends, maybe to see a sharp movement up to here, more or less. We could see that. So these are the potential scenarios that I think are likely to happen. Here it says, maybe I missed the boxes input. Sorry for being late. Are those boxes related to FIBs, confluence area, also known as FIB clusters? No, I believe that I explained very briefly some days ago. This is pure intuition, at least for me. I decided to. It was like an impulse, like an instinct to try to draw boxes that just feel correct to me, and I've been doing that for some months, and I have liked the results. So that is why I just decided to share them with you. I don't know. Maybe I wouldn't be surprised that if you draw some fibs, they make some coincidence here. I wouldn't be surprised because more or less all the prices will make a coincidence with some kind of fib. But the thing is that literally I draw this like if I wondering like if I was a painter. I see the price action, I feel the price action, and I put things, draw things that simply look right for me in the shapes, in the length, in the thickness, and that's it. So I'm going to show you that actually this has been working. Why? I don't know. Subjectively, I've been saying in other webinars explaining that at least for me, the subjectivity, creativity, imagination has been a lethal part to jump from the break-even area to the profitable one, at least for me. So I don't hesitate to try this kind of stuff. Okay. So well, this is what I believe that could happen, and precisely and related with this latest question. Here it says, so some sort of market personal sentiment. Exactly. Exactly. Those are the words. Nice. Experienced traders tend to feel the market and price action movements. Yes, because you get used to them. At least in my opinion, price is like a little animal. It moves like an animal, but it's like not that simplistic animal because actually is the evidence, the graphic evidence of thoughts, interest, greed, fear, and a lot of sophisticated stuff. But at the end are expectations, emotions. So when you connect to that, it simply feels. You feel. You start feeling it. That doesn't mean that you don't think. Of course, if you feel something and you don't think, one thing is that you need to feel the market and then have confirmation, objective, mathematical, technical, whatever. But yeah, at least for me, I couldn't understand trading if without subjectivity. I know that there are a lot of people that would say that that is nonsense. Well, maybe for them it's nonsense, but at least for me it hasn't been some nonsense. This is why, and this is something that I posted on March 12th. The price action on Mexican peso, and even though maybe I have lost real money trading Mexican peso because of personal mistakes, these boxes, look how well they work. I posted this on March 12th, so this is like here. I posted this on when the price was here. So these are my assumptions. At this moment we have a broadening falling wedge in the 4-hour. This is it. I drew these boxes. So check what happened after. And before continuing, I draw these boxes not on the 5 minutes, not in the 30 minutes, not even in the 1 hour. I usually use the 1 hour. But to really be significant, I need to feel them correct in the 4-hour. So yeah, when the market was doing this, I drew this. I'm expecting a movement to the downside in dollar Mexican peso. I've been explaining how I migrated from being super bullish on dollar Mexican peso now to be bullish, bearish on dollar, bullish Mexican peso for artificial reasons, due to the latest decisions by the Mexican Central Bank. But well, that's another story. The thing is that now I believe that this could even retest the 1880 that was the price before the huge spike we have in dollar Mexican peso after having the Donald Trump surprise election. I believe that the market is heading there to just to retest and reset the things. So, as you can see, we just get to the point that this major support that should work is over. But look what happened. The market actually stayed here for several hours, then tried to break up, barely tested this, then suddenly came back and dropped just to here. Just look at this. I mean, the important thing is that this was drawn beforehand. So this is why these boxes have been working. And they have been working for me, and I share them here. If, for example, if you had decided maybe to, okay, let's buy here, and you say, oh, this box looks nice, and you put a buy order here, and then a sell order here, well, you could have been in a very nice 8-hour profit. Because the market recognized them as interesting zones. Now we're getting closer to this line. So this is why I believe that the more time it passes, the more likely is that this will drop. We are facing for some more hours this resistance, and we're just about to cross this resistance. Okay, and this support is just about to expire, and this already is gone. So yeah, it would take maybe after Fed spike to here, then the market could start selling off, stabilize here, then this support box would be over, and then this could simply continue to the 1940 at least. So this is the power of these things that I share. So feel free to use them in your best interest. Or, as you can see, these boxes are not trading recommendations, are just interesting zones. How could you say it? Zones of price of interest. And accordingly, how the market moves when they are in these zones, when you go to the intraday charts, is where you can get the meanings that maybe that are useful for you. Okay. Here it says guest 107. What about those fourth and fifth candle spikes? Price action should be O. What is BO? Any of those break over? No. In order to consider a direction based on your strategy, so play breakouts. Okay. Price action should break out any of those levels in order to consider a direction? No. No, these are like, how you say it? You could say it. Like bouncing zones. Agnostic buying zones. You need to come to the market with an idea previously. For example, these boxes will tell you nothing if you're looking for direction here. Because yeah, you could have a breakout here, but then boom, it could drop. It could drop, jump here. We have for one time, 2 times, this support being broken. These are zones. So what the price does here and how it moves is what, at least in my way I understand trading, is what lets me know if what's next is a retest of this or maybe a retest of this. So it's not, there are no like one thing that I am looking to maybe say, okay, no, this is going to move up here. No, in the dollar Mexican peso is the overall the fundamental thing based on the latest strategy by the Mexican Central Bank to try to stop the volatility against the Mexican peso that is causing this. So yeah, I am bearish in that, and the price boxes, of course, I am using them to try to consider a trade to the downside. For example, I had yesterday a short trade with a stop loss here, And I said yesterday that I was considering maybe to move it or not because it was just in this resistance zone. Well, what I did is that in my live account that I decided to open a short trade, yes, I did move the stop loss up to here, above this line. But in the demo contest account, I just forgot to do it. It was closed here. But when I realized that, I opened again a short trade. Then I just closed some minutes ago that short trade here because I expect that the market will be heading to retest this zone plus this resistance after the Fed. And then after, the market will try to do something like this. That's what I believe. So here it says supply demand zones backwards. Breakout supply demand zones. Argnoid game bounces. Yeah, I suppose so. No, I don't know. Supply and demand zones are simple. Support are supply and resistances are demand. Are demand the supports and supply the resistances. The quality of it is very difficult for us retail traders to know it. We have just an indirect way to know it. It's like science. When you measure the weight of the sun, for example, you don't go there with a scale and you put the sun on it and say, okay, this weighs trillions of tons. No. There are indirect mathematical ways to measure and to do things. It's like indirect reflection. This is the same thing. We only have price action, how the price moves surrounding important prices like support and resistances. There is not simplistic like if a 4-hour candle breaks, is bullish. No. You need to come bias to the market and then allow connecting to the flow of the emotions of the market. That is very difficult because it's very difficult to differentiate between real intuition and just trying to justify a view that you have. It's very difficult to differentiate when you are actually feeling something or wanting to feel something. It's super difficult. That is why it took me years and it worked for me. There are a lot of people that they simply need to work in other way. Okay, so yeah, these are, for example, you see here, yes, this is a supply resistance because it's obvious, but it changes everything. When you, instead of drawing a plain resistance here, you start drawing boxes with different thickness, different shapes, different. It's like Tetris. You have imagine it's like Tetris. You have different shapes, different sizes, different colors. Because even the coloring, this coloring was automatic. I didn't draw it, but it tends to have some sense when you start seeing colors. So just as a recreative thing, if you want to try to do it, not to trade it, just try to do it, have fun. Open a demo account, try to follow this logic, and open dummy trades in demo account and see how you feel. If you feel correct after 1 month, 2 months, 3 months, 5 months, 6 months, then you are sure that maybe you just got the feeling of the market. This is a super tool for me. But it's intuition completely. But well, I share it here, and as you can see, well, this overall, when I saw this was like, oh my God! I even got surprised because it was like if somebody was watching exactly this. But of course, it's no-brainer. This low is this low. The only thing that I did is that I put it in a way that made much more sense because I used a box with a thickness, with a color, and with a duration. It's completely different when you view that and when you use only a plain straight line. Here it says arachnoid. Let me see what is arachnoid. Yes, of course I know this game, but I didn't know it was Arkanoid. Arkanoid, yes, Arkanoid, yes. I remember playing this when I was a teenager. Yes, of course, I love it. I love to destroy this, and the latest level was a huge big face. There was a password to allow you to get directly to the end. It was DSI Magic. DSI Magic. I still remember it. Here it says, do you filter with other technical analysis tools those potential bounces? What risk reward do you use for this type of trading? True, might not work for everyone, especially if he's not experienced trader. Yes, I'm going to answer the other two questions quickly because we have just a webinar after. Yes, it takes a lot of time. So you don't start with this. You end with this. But yeah, it is like if you were there, or I mean, you can draw boxes. Maybe they won't work for you, but at some point maybe you will find a way to make it work for you. The tools won't work for you. You make the tools work for you. That's the difference thing. A tool by itself won't work. You make it work. You adapt the reality surrounding to make it work for you. Price action bounce from demand goes to supply exactly. And well, answering quickly, risk reward, I love one-to-one. And from one-to-one, I start moving. It's very strange that I open, for example, if I decide to open a short trade here and I am looking for shorting, at least initially when I decide to short here and I say, okay, I'm targeting this zone, my stop loss should be like here. Initially. Then I see how it goes. I watch the market. I see if there's something that I don't like. Maybe at the first take profit target, I take half of the profit and then I move my stop loss at break even. So then, starting with a one-to-one, maybe some hours after, it becomes a infinite reward with no risk, theoretically. So this is the way more or less I understand this. I am not obsessed with risk reward. I actually, using this, for example, if I saw this and even if imagine that the price hovers here, it touches here and the price continues here, maybe I would start considering shortening my stop loss by here. What I did, when I opened a short trade, I believe it was a short trade here and my stop loss was here. But then I decided to move it here. Why? Because moving stop losses is a wise thing? No, it's neither wise or silly. It depends on why and how you do it. But when you have this, and you decide to move a stop loss here, it makes complete sense. Okay? So this is more or less the way I trade. Not necessarily it's reflected in my trader contest account, unfortunately. But well, the logic is here, and maybe you will be able to profit from it in some way, at least for experience, to grabbing an idea from another person. Here it says, do you add more positions sometimes? All the times. But of course, you need to manage risk very, very wisely. For example, if I am going to risk 3% of a position of this kind, maybe I open the equivalent of 1% here with a stop loss here. But then I decided to move it here. Then that would represent more risk. But when the price got here, I didn't open it in my live account. But usually when this happens, I open a small trade here. But of course, watching my overall risk, I understanding a position as a group of trades that at some point the risk shouldn't be above certain level, etc., etc. So yeah, but you need to. I'm not just opening more trades just because it goes against me. No. If I'm going to open in my live account, for example, another trade because it is touching some kind of this stuff. If not, there is no sense. I'd rather than wait for this to be touched and then maybe to open a trade here. Maybe I could hedge this extra risk with in other currency. Maybe hedging it buying dollar yen because I am expecting dollar yen to move up gradually and maybe this dollar to move down quickly. So I play with the things that way. I would like to thank everybody for showing up. We have next webinar next, right, Kate? If I'm not wrong, she said that we have a complete. Now, thanks to you, guest 107, for the questions. I really love when I have feedback. Thanks a lot, and feel free to drop by every day from 7 to 8 a.m. GMT time. I'm always here delivering the webinars, and I will be very happy to see you back. So I would like to thank everybody for showing up. Remember that if you're going to play something, you're going to trade something during this Fed decision, just take the normal precautions, expect huge volatility, don't open a super leveraged trade because you can have a margin call. So just play it safe and responsibly, and that's it. There are a lot of potential opportunities for today. So thanks a lot, everybody. Remember that I expect you tomorrow, same time, same place. This is Alberto Alvarado. These are my social media. Remember to trade safe, be safe, and bye-bye.